The world's most trade-dependent economies, a deep dive. The trade-to-GDP ratio, a key indicator. The trade-to-GDP ratio is a crucial metric for understanding a country's economic reliance on international trade. It's calculated by dividing the total value of a country's exports and imports of goods and services by its gross domestic product, GDP. A higher ratio indicates a country's economy is more intertwined with global trade flows, making it more vulnerable to shifts in tariffs and trade wars. The top trade-dependent economies. Here's a look at the economies with the highest trade-to-GDP ratios, according to the World Bank data for 2024, with a focus on jurisdictions with a GDP of $300 billion or more. Hong Kong, the re-export hub. Hong Kong boasts an astonishing 359% trade-to-GDP ratio, making it the most trade-dependent economy. This is largely due to its role as a re-export hub, facilitating trade between mainland China and the rest of the world. Hong Kong's free trade policies and strategic location have contributed to its dominance in this area. Singapore, the trading powerhouse. Singapore ranks second with a 322% trade-to-GDP ratio. Its strategic location, robust logistics infrastructure, and strong global market connections have solidified its position as a major trading hub. Singapore's economy is deeply integrated into international trade networks. Ireland, mitigating U.S. tariffs. Ireland's 253% trade-to-GDP ratio highlights its significant reliance on international trade. To combat U.S. tariffs, Ireland is offering grants and support to companies exploring new market opportunities outside the U.S., demonstrating a proactive approach to mitigating trade risks. United Arab Emirates, Vietnam, Belgium, Netherlands, Malaysia, and Thailand. These countries also have high trade-to-GDP ratios, ranging from 165% to 158%. Each has its unique trade relationships and strategies, contributing to their economic growth and development. The impact of the trade war. The ongoing trade war, fueled by tariffs, has significant implications for these highly trade-dependent economies. As these countries are exposed to geopolitical shifts and tariffs, they face challenges in maintaining economic resilience. Industry experts suggest that Hong Kong needs to evolve beyond re-exporting, focusing on supply chain services and infrastructure development. Staying resilient in a changing landscape. To navigate the complexities of the trade war, these economies are taking various measures. Hong Kong aims to diversify its economy and enhance its airport infrastructure, while Ireland is actively supporting companies in exploring new markets. These strategies aim to reduce the impact of tariffs and maintain economic stability. Further exploration. For more insights into the world of international trade and its impact on economies, explore the following resources. Top countries behind U.S. tariff revenue. Industries hiring and firing the most employees. The $150t global debt market. Fed rate cuts versus other G7 countries. The fastest growing jobs, 2024 to 2034. The $127 trillion global stock market in one giant chart. The rise in first-time home buyers' age. Real estate ownership by generation, 1991 versus 2025. America's economic engines, the biggest industry in every state. Mapped, manufacturing as a share of GDP, by U.S. state. Profit powerhouses, ranking the top 10 U.S. companies by net income. Millionaire hubs, mapping the world's wealthiest cities. Tomorrow's growth, GDP projections in key economies. Mapped, interest rates by country in 2025. U.S. housing prices, which states are booming or cooling. The silent thief, how inflation erodes investment gains. Trade tug-of-war, America's largest trade deficits.